Hi, everybody. Welcome to the September 2025 Economic and Market Update presented by Commonwealth Financial Network. My name is Chris Fasciano, and I am Commonwealth's Chief Market Strategist. Markets were up again in August, despite some early month volatility. The S&P 500, Dow, and Nasdaq were all up, low to mid-single digits for the month. These strong results brought markets to new record highs and indicated continued investor demand for U.S. stocks. International stocks also ended the month in positive territory as risk assets rallied in August. Even bonds were up as falling interest rates supported bond prices. Short-term Treasury yields fell during the month following Fed Chair Jerome Powell's comments at the Jackson Hole Economic Symposium, which signaled his openness to a potential rate cut at this month's meeting. Markets have now largely priced in at least one rate cut at the Fed's meeting in September, as well as an additional rate cut by the end of the year. Fundamental factors were also supportive for markets in August. We're wrapping up second quarter earnings season, and so far, so good when it comes to company performance. With 98% of companies having reported earnings, the average growth rate for the quarter stands at 11.9%. This is well above analyst estimates at the start of the earnings season for a modest 4.9% increase and signals continued strong performance for U.S. companies. Full year 2025 earnings estimates have begun to tick higher as well. The outperformance was widespread, as 8 of the 11 sectors saw earnings beat expectations for the quarter. Over the long run, fundamentals drive returns, so this was an encouraging update for investors. While returns in corporate fundamentals were solid in August, the economic updates paint a more mixed picture. The July jobs report showed that hiring slowed notably during the summer, as 73,000 jobs were added during the month. Additionally, the job estimates for May and June were both revised down sharply. While the economic backdrop has largely supported markets so far this year, potential stress for the labor market could foreshadow a shift for consumer spending. Aside from the weakening economic factors, there are other risks that investors should keep in mind. Geopolitical uncertainty remains, as demonstrated by the ongoing conflicts in Ukraine and the Middle East. Domestically, we continue to face policy uncertainty. Markets may also face more fundamental challenges as we head into the fall, including risks of rising inflation and shifting Fed policy. Ultimately, things remain in a solid place as we finish off the summer. Market fundamentals are strong, and the economic backdrop is still supportive despite signs of potential weakness. While there are risks that are worth monitoring that could lead to volatility in the short term, over the long term the expectation is for further growth and market appreciation. That's it for this month's update. I'll be back next month to walk through whatever the markets throw our way. Take care, and thanks as always for watching.